Hello and welcome to today's video, which is called S&P 500 short squeeze. That's what I had been telling you about, that this is not a game changer, and it pains me so to see that some 3 followers of this YouTube channel who had reviewed the analysis could not have distinguished properly between the time frame outlooks and left. And you see what kind of a price action they will be waking up into during today. Thank you for liking these videos and subscribing to the channel. This only highlights the fact that we have to choose what kind of traders we are, whether we want to chase every counter trend move, even if it is supported by a time-sensitive headline such as pause in auto tariffs on Canada and Mexico, or not, whether we want to focus on lofty valuations, upcoming earnings, and the implications basically of new admin policies, from tariffs to cost cutting at the federal level. You know pretty well what I do on my side. Let's dive right into the charts, and I promise you this video will bear one overarching lesson around midpoint of it. I will be packing it fast so you don't want to miss it. Yields a little bit of a counter trend move because we did not have straight string of stagflationary data. Services PMI was not that bad. New orders were fine and the prices were through the roof, which is not exactly stagflationary. Much work to do for the Treasury regarding the policies that they are implementing. However, I don't see 10-year yield making it too far above for 30%. Of course, that has implications for the US dollar too, which is sliding versus the euro, not so much against the yen, and Japanese government bonds appreciation is orderly, so no fear of yen carry trade unwind. Still, 2 weeks ago I did a great in-depth video. I will be linking to it. You can review it. Not that much had changed. As for yesterday and today, I had called for roughly a consolidation in gold and silver outperformance, both of which we are seeing, and if you are a trading signals client, you are ready for these moves and have been enjoying them. Same goes for crude oil, where I had mentioned one surefire, very high odds trade connected with oil in yesterday's publication. Quick reminder of what it means to be having notifications on my Twitter feed. I have been cautioning you since early in the week about European stocks and the deficit spending full speed ahead, then the torpedoes, whatever you call it. It's not entirely peaceful atmosphere there. So Euro likes it. European stocks like the build-up and fresh liquidity. Aga, what changes does one Oval Office meeting on Friday bring? Yeah. Coming back to stocks, we had seen the distinguishing factor between what is oversold and what is totally oversold. I'm checking market breadth, comparing the percentage of stocks trading above various periods of moving averages. And today, pre-market, we had seen the turn, which all those who had been impatiently burned on yesterday's short squeeze will be waking up to today. This is, before the close yesterday, what I had sent to premium swing trading, meaning the daily analytics clients. I identified 5872 as the ultimate resistance and not to be touched. It wasn't. Prices turned south right after mid-European midnight, Central European midnight. So it's one thing to be trading headlines and squeezes and momentum, and the other thing is attempting to turn it into a longer term position, because there is something that is smacking of capitulation, smacking of consolidation. What is the best case scenario for bulls? What is the macro environment that these moves are playing out in? And you can see that those two upper signal line on the Ichimoku signal complex, because I use the cloud, and both signal lines on the 4-hour chart had been sending quite a message yesterday, and the momentum as seen via necked histogram had been not totally positive. So I was counting on prices to roll over to the downside, because looking at VIX, this is not yet done. And this is what I tweeted early European morning about the distinguishing factor. And one more time I highlight that you gotta choose what kind of trader you are. Adjust for volatility, which is through the roof, because uncertainty is through the roof. I mean intraday magnitude of price moves one or the other direction, and the focus is on open trade management and not letting your emotions dictate what you want to do in the markets. So I even correctly called it a warning, because we had seen flash to my initial downside target 5,770 on the March contract, and you see how it went and which way we are heading pre-market. Now, is it engulfing? Is it not engulfing? Is the volume an obstacle? Will it last? Won't it last? Right now, my answer is clear to you, and the sectoral view shows that it's been superficially a really risk-on day, but one has to understand the driving force, the origins. My join page to help you select. I will be presenting to clients more about where I see markets going, and in the current environment it's about open trade management. Levels, going with the flow,